Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zach's Market Edge.
Welcome to Zach's Market Edge, the podcast about investing in your life. I'm your host, Tracy Reineck, and this week I'm joined by Zach's very own Jeremy Mullen, who's the editor of Zach's Counterstrike service, and he's here to talk to me and everyone else about what's happening in the fertilizer area. We've covered agriculture, and so this is kind of an agricultural offshoot, but it's its own entity because the fertilizer industry, moves with the prices of those fertilizer, and it's not good. It's similar to what's happening in corn, wheat, soybeans, all this stuff. Fertilizer prices have plunged. So, Jeremy, let's talk first about what's going on with fertilizers. And when I say that, I mean nitrogen, the potash or potash, as other people call it. I don't know why I call it potash, but I do. I'm just calling it that. I don't care what anyone else says. Dave Bartosiak made fun of me for calling it potash.
Yeah.
Sorry, Dave. It's potash in my language. And also the phosphates, that's all in the potash area. So what is going on? Why are these prices plunging down?
Well, let me get to potash. Potassium fertilizer, that's all it is.
Okay.
And what it does is potassium is removed from the soil when crops are harvested, and that needs to be replaced in order to maintain future growth for a crop. So naturally, if you're a farmer and you're taking all this potassium out of the ground due to your harvest, the next season you need to reload.
Okay.
And that's why we need nitrogen and phosphate rock. It's putting more minerals. The nitrogen is a component of chlorophyll and helps the amino acids and the proteins and everything, and that's how plants actually grow. So these are all three of those, and sulfur as well, are needed in order to maintain that healthy harvest for the next year. So what's going on with the overall market? Well, these cheap corn and wheat prices put less money in farmers' pockets. They can't afford to buy as much fertilizer, and therefore the price of fertilizer will come down. And that's where we've gone from record high fertilizer prices in the 2010 to 2012 years to, back to lows where we were in 2007.
Okay, I saw some stats about this just in terms of Iowa, and I like to use them as like the general overview for the U.S. agriculture community. This is for 2015, the USDA put all this out. But their seed and plant purchases are down 8% year over year. Their agriculture chemicals, that's like the crop protection stuff, that's down 8%. And then the fertilizers and soil conditioners are down 11%. So this goes into the story you're saying, but they still have to buy some of it. I mean, you can't not buy it at all.
Right. Well, I think they're getting more bang for their buck. I mean, we're getting these record yields, and the farmers are basically utilizing this to the best of their ability and the best that their wallet can afford them, and they're turning out these record crops. So for the fertilizer prices, the demand is not high, so that cost has to fall.
Okay, I've seen some other discussion about why these prices have also fallen. It apparently China and maybe even Europe have been producing too much, so they're putting out too much of all these nutrients. And then, the inventories haven't declined enough. So this goes back to the supply and demand scenario, right, that eventually you will have more limited supply. And I have heard some of these fertilizer companies have been shutting down mines or cutting back production. So eventually, a couple quarters out more, maybe it'll come back into balance, and then those prices will start to rise, and that will help them.
Right. I mean, once you find that balance, you'll have your price and things can turn around. I mean, when you have supply and demand working against you, the price has to keep on falling until you find that balance.
Yeah, I saw on the potash side that I think it was Agrium said that no additional capacity is expected to come online like in the second half of the year. So that's helpful. Yeah. And then some of the other stuff, Chinese exports of urea, which is on the nitrogen side, was down 25%. So maybe the Chinese are also finally figuring it out.
Well, if they're not making money, they're going to close up shop.
They're going to close down. And there's also been slow demand in India. That's big on the urea side. And Indian imports are actually down 19% year over year, but that probably won't last forever either. So
Yeah, I mean, India is one of the highlights of the global economy lately,
Right.
it seems. So, and I mentioned earlier in the previous podcast and how the government supports ag. So I think that should be a positive area.
Okay. We're going to discuss a lot of these companies now, the fertilizer companies, which I have always been real fond of, but right now it's tough. Like times are difficult. Estimates, I'll just say I looked at all of these, the estimates for this year and next year. They're being cut further for this year, even after the recent earnings reports. And that while it looks better in 2017, most of the estimates for 2017 were being cut as well because they were just
Cut
too
by a lot.
Yeah, they're just too optimistic, even though it'll be better, but it still won't be good.
Right.
So, and some of these companies actually give really good outlines of where their business is in their press releases. I do encourage people to go look at them, especially Agrium. CF also has a pretty good press release, but they go into the whole industry and like what's going on. So you can learn a lot just by reading some of their press releases and seeing kind of where they think things are going in the industry overall. I know, let's just start with CF because I'm going to mention them. They said in their press release and on their conference call that they expect better results by 2018. So that's a little bit further out there. And due to this capacity removal, like as the mines are shut down, similar with oil or any of the commodities, you produce less and things improve. And then you're having so much nitrogen capacity coming offline that they think that some price increases will begin, but not until mid 2017 or so. And they also expect, the corn and the wheat and the soybean prices to start to moderate higher around that time as well. All that will help.
I think that's what they're hoping for.
I know this is on the bright side,
Yeah.
but CF, they're nitrogen mostly.
Yep.
And their earnings expected to be down 66% this year. Like I said, barely any rebound for 2017 and estimates still being cut, but they have that dividend of 5.2%.
Yeah, which is a great dividend. Pay while you wait for the turnaround. However,
Right.
I don't know if you want to enter here. This stock really looks like it's going under 20. They had a 51% miss not too long ago. That's the fourth miss in a row. I saw estimates slashed almost in half for 2017.
Yeah.
That's just in the last 90 days. So why don't you just wait on this one for a little longer?
Okay.
Maybe that dividend gets up to 6 and you can start looking at it. It's nice to get paid to wait, but to get paid to wait to 2018,
That's
there's
a long
probably
time.
some other places you can put your money in.
Right. And it doesn't seem that cheap here, 17 times.
Right.
Maybe if it fell a little bit more, it would be much more attractive.
Yeah, so if corn prices do get below 3, you could see some panic, just like
Yeah.
we saw some panic in the oil space, and maybe that's when you grab CF.
Okay.
Looking at the chart, terrible down trend line. I'm seeing possibly 16, 17 as a target if you were short this stock. But of course, if you're short, you have to pay that dividend, which is never fun.
Right.
So I don't want to get long. Possible short for a dip under 20. And I would look at the stock if that dividend got at 6%, and that would be trading in that $17 or maybe $18 area.
Okay.
Yeah.
On the potash side, Mosaic, they're the largest phosphate producer in the world, I believe. But again, similar issues. Earnings expected to decline 80% this year. Estimates being cut for 2017. They did say, and this is good for everybody to know, that they have no plans to cut the dividend, but they may revisit if the markets, the overall agriculture markets, don't improve. I don't know what that means. And that they also could see some consolidation in the industry overall, but they pay 3.9% yield right now. But they're certainly not cheap. I mean, we have a forward PE of almost 50 on that one.
Yeah, I mean, this is another one I wouldn't really touch. I mean, this was one of the hottest stocks back in 2008. And this
Super hot.
This got to $163 a share. Now we're looking at 28.
Wow.
I mean, pretty remarkable turnaround. Now,
Yeah.
2008, when it took off to 163, it also fell during the financial crisis all the way back down to these levels
Okay.
before rebounding above 80 in 2011. So the thing is very volatile.
Yeah.
And, after the financial crisis, it continued with its strength due to the rebound and surge in corn prices. But now with corn coming back down and wheat coming back down and farming kind of falling apart,
Right.
we see Mosaic hitting these, 7-year lows if it gets down to 20,
Yeah.
which not too far away at 28.
Okay.
The dividend compared to CF isn't really there. Until I see a turnaround in those estimates, it's a no void for me.
Okay. Turning to potash, this is a ticker POT. It's not the pot stocks. I know everybody gets it confused. I occasionally see people talking about marijuana on the Stock Twits feed with this one. No, it's they got it first. They got the POT ticker, but similar story again. Earnings down 63%. Estimates being cut for 2017. Not super cheap. PE forward PE of 29. They've actually cut their dividend twice so far. It's been pretty brutal. The yield is now only about 2.5%. So that's not a good story either. But they specialize mainly in the phosphate and the potash side, so it's looking worse on that side than maybe the nitrogen even.
Yeah, they're the world's largest potash company.
Okay.
Saskatoon, Saskatchewan.
Yeah,
is
they're
where
Canadian.
They're located. Yeah.
So similar play. I have to say, in full disclosure, I do own potash in my portfolio, but I owned it like a long time ago.
Okay.
And then as it dropped down, I was like dollar cost averaging. I'm like, oh, this is so cheap. And it got into the 30s. I did sell some in the 30s. I'm like, I'll just keep a few shares because it was paying this really great dividend.
Right.
And then they slashed the dividend twice now. And I was like, well, the first time they slashed it, well, I'm still getting the good dividend. It's still like 6%. And now they slashed it again. And it's down to 2.5%. And who knows if that's safe. And I'm still in it, and I still am buying some shares because I do have a longer term outlook, but it looks awful right here. I mean, my outlook is like years down the road.
Yeah, and I think that's what you need. You need that long term, especially since they're cutting that dividend.
Yeah.
It's like deja vu with the oil sell off. If the company's cutting the dividend, get out.
Right.
Because the big money is going to be getting out because if they got in it for that dividend,
right,
they got in it for that longer term horizon, all of a sudden that's falling apart. They're going to exit quickly. I got 14 billion market cap on this guy. Late July, they had EPS and it was in line, which broke a 5-quarter losing streak. If you want to say in line,
okay.
Broke a streak. Estimates are falling across all time frames. So once again, the outlook for the next couple of years is pretty much the same as the other guys. They're going to keep struggling. And until we see some estimates coming up, which won't happen until these corn prices start picking up, and this could really take years, before this starts improving.
Potash is hoping that the CF call of next year is on.
Yeah.
That's what they're hoping.
Yeah, when I hear that word hope,
it
doesn't give me a lot of hope.
Okay.
Hoping and wishing are not good feelings to have when you're investing.
Yeah.
You want a little more certainty on what you're expecting in the next year or two.
Okay.
And I think there's a lot of uncertainty here.
Oh, yeah, definitely. Now, let's switch gears over to a couple of companies that are, while still have fertilizer business, also have some other business segments that gives them a little bit more diversity. So they're able to weather the storm a little bit better. And we'll start with Agrium. AGU is their ticker. They're one of my favorites in the agricultural sector, mainly because they have both the fertilizer side, which obviously, as we've just been saying, is super depressed, but they also have retail side where they own these stores all across the Midwest. And I think they're in South America too. And they have, been able to, weather a little bit better on that side because they sell seeds and crop protection and all of that. And they said some interesting things after we're getting this record crop here in North America. They said that they expect to see strong herbicide and antifungal demand as the farmers work to preserve those yields. You got to save them from the little creatures that can get in there. So they'll be selling some of that to the farmers. And then they do hope that with the record crop yields that they will spend some money on the nutrient, renewal back into the fall planting season, and that will give them a little boost, but that remains to be seen. They have been buying up these stores. They bought 30 stores from Cargill and they added 33, I think, last quarter too. I'm not sure if those were also from Cargill. So they've been spending a lot of money on getting these more retail stores. It seems to me their plan kind of seems to be, we'll get some of these on the cheap when everything's all depressed. We'll spend some money here, and then we'll reap the benefits when it turns around.
Yeah, it sounds like a good plan. I mean,
Yeah.
they're a little more diversified than some of these other guys, and I think that that'll help them. Looking at the chart, looks pretty good, and especially in comparison to some of these other stocks we've been talking about. It's a Calgary company, 13 billion market cap. I had 3.75 dividend on this.
Yeah, me too.
So in early August, they had a 1% beat, but that was after a 142% beat in May. So the market was really anticipating disaster and it didn't come. So now the stock is hanging out here at around 92. Looks like 87.50, some support. Looking back to February, low is just above 80. So an entry here, this would be my favorite of the group because you can get in here around 90. You have an easy stop if it hit those February lows. Obviously, if those lows, something's wrong. You get that nice dividend while you wait, hopefully for things to turn around. Now, the estimates continue to fall just like the other stocks. So you have that working against you. But if they're meeting or beating these estimates, I don't think there'll be a lot of pressure. I think the pressure will come if there's further depression from what those analysts are calling for.
Yeah, this is one of the stocks I wish it had sold off more because then I could get it cheaper because I do like it, but it's trading at about almost 18 times. So it's not super cheap either. But if for some reason it were to be pulled down, if those corn prices go even lower, under $3, maybe this one will get pulled down along with the group and I could get in at a little bit better price, but it is my favorite of this group.
And be careful because you might miss it. I mean, it keeps on banging up against this 97 area, and if we get over there on a positive earnings next time they report, you might miss your chance. So I think if you're going to get in the fertilizers, this is a good diversified way, relatively speaking, comparison to these other stocks to get in.
Okay, and then our final stock today is a small little Ohio company called The Andersons. I always think of The Matrix when I hear this, because he's always like Mr. Anderson and that. Okay. And I always put the in there. I think they're just Andersons Inc., but in their press release, they call themselves The Andersons too. Yeah. And it was founded in 1947 by the Andersons family. I think they still work in the business, and they are much more diversified. They're small, but they have the nutrients, they have a grain business, they have some ethanol, they have rail, where they have rail car sales, and, I think they lease out, and then they have retail. And I found this out, I was so excited. You've actually been in their retail store in Ohio?
Multiple times. There was a time I spent, growing up in Toledo, Ohio, and the Andersons was like your Target before Target. They have...
Wow.
But with the groceries too. So they have grocery. I remember the toy aisle. I remember my mother going there to buy wine. They have a big deli section.
Wow.
I mean, they have everything.
I didn't know they had food.
And I believe they had 2 locations. They might have trimmed it to just the one.
Okay.
I'm not sure. I haven't been back to for a while.
Okay.
But yeah, I mean, that's how I knew it. So when I started trading back in 2005 and 2004-5 area, this stock Andersons was starting to become on fire. In 2006, it took off. And it was like a $50 stock went to $200. I'm like, what is going on with this? This can't be the same Andersons, is it? And I looked it up. It's Maumee, Ohio. I'm like, sure enough, this is the Andersons. I didn't even know that store I went to was publicly traded and how big they were. I mean, I was a young kid. I had no idea. And yeah, it ballooned. And the reason they took off back in 2006 was that, I don't remember back then, but it was that ethanol craze.
Right.
And there's Pacific Ethanol, I think it was PEIX.
That's
was
right.
another company that went crazy.
Yeah.
And that, I don't even know if that's still
What happened to that one? I don't know.
I remember it went down into the single digits, probably like a $1 or $2 stock. Now,
Wasn't Bill Gates buying the ethanol companies like back in the day? I think that's why that other one went
everybody
crazy.
was. That's why this went nuts to 200. So, it eventually, when the ethanol craze disappeared, I came back down to earth, and let's see, I got my chart here. Came all the way.
Yeah, the shares have been. Well, they were really hot when fertilizers were hot too.
Right. Yeah. So this split a couple times. I see it was like a $40 stock when I'm talking about.
Okay.
It was at 200. So they split a couple times. Actually ran above those highs up to 70, and now we're back in the mid 30s here.
Okay, but they're not cheap either. Their forward P is 37. Even though earnings are expected to decline 32% this year, they do see some rebound again in 2017. The same story, but still not that great in 2017.
Yeah, they just recently had a buyout offer, which they rejected. I saw a couple of reasons. They don't think the ability for this HC2 is the company. I'm not familiar with them. Their ability to finance was questionable for Anderson, so that was part of the reason for rejection. And when your stock was, up at above 50 in early 2015, and they're offering 37, you're more hesitant, especially if you're a family company that's been around.
Well, yeah.
So, you got 2,500 employees that are relying on you too.
Right.
So yeah,
they pay a dividend.
Yeah, they do, but
1.7.
Once again, these estimates are getting slashed. So why do you buy this stock? Well, obviously the possibility of a raised buyout price, there could be some opportunity here. This hit a low early in the year, just in the mid 20s.
Okay.
So that's what you're risking if you want to enter here in the 30s. But yeah, a company that is I'm very familiar with. I'd love to see them do a lot better, but they just aren't right now.
Yeah, I see that some of the analysts think the second half of this year will be better, and that business is slowly starting to improve, especially on the grain side. That's where they actually have the grain elevators where they store and all that stuff.
In 1947, they started with one grain elevator, and they've grown their business to what it is today.
Yeah. So all is not awful with them, but again, they're more diverse like Agrium is. So if you're looking for a play that's not just pure fertilizers and they have some other things going on, they're one to check out. Ticker is ANDE, but I still like Agrium better.
Yeah, I do too. This one is good. Anderson's is good for that buyout speculation and a long-term horizon. You do get a smaller dividend, but I think you have a couple things working in your favor here, and it's not dismal like some of these other stocks, like the Mosaics and the Potashes.
Yeah, you just look at those estimates on those too, on just the pure fertilizer play.
It's scary.
It's awful.
Yeah, but look, just be patient and wait for those estimates to turn around, because when they do, big investors will get in there because they'll see that turnaround coming.
But it might be years.
It could be. Yeah.
No one knows.
Put these in your back pocket for later.
People always asking me, and I'm like, well, the magic 8-ball says it's unclear. So that's kind of what's happening with this. But can always keep track of those estimates on Zacks.com. That's what I do. And see, when they change and all of that. And we have all those on our site. So go check over there. So let's recap the stocks again. CF Industries with the ticker CF, Mosaic, MOS, Potash, POT, Agrium, AGU, and the Andersons, ANDE. Oh, we almost forgot the ETF. We talked about this. Global X Fertilizers / Potash ETF.
Soil.
SOIL is the ticker. You can get all of the fertilizers if you're glutton for punishment and you want to get them all in there. Yes. And it includes some interesting ones, though, I had to say, including the ones we just mentioned. But since it's worldwide, they have this company called New Farm on there, which is from Australia. They have Taiwan Fertilizer. They have Syngenta. So you're getting like everybody.
Yeah, I mean, it's a good way to. This is longer term play. It's a nice diversified way to enter it. The volume for this ETF is very, very low. So
nobody wants to be in it.
Yeah, apparently. I think I saw today 5,000 shares traded.
That's it? Okay, yeah. These are really out of favor now.
Yeah, right.
So you'd be really forward looking, I guess, if you're into this play right now.
Definitely.
Okay, but that's another way to keep in mind and look at that. The ticker again is SOIL, easy to remember, soil. Yeah. So they got a good ticker there. So if you want to know anything more about agriculture, Jeremy and I did do another podcast on the ag stocks on the other side, on like the equipment and on the food companies and what's going on that side, because it's also kind of challenging over there too, is like all I can say about that. But go check out that podcast. And we also covered gold. We're going to have to cover gold again because I think it's still going up. But gold is another interesting commodities play. And and Jeremy and I also did how to short sell stocks, because I don't know anything about that. So that was really helpful to me to have that discussion. So you can check out that if you want to short any of these fertilizer stocks. You can go get some tips over there on how to do it, because some of these, although the shares have come way down, who knows, some people still might want to short them again.
Yeah, shorting these, there's a lot of people who want to short them. So
yeah,
you're in danger of a short squeeze if things do turn around. Yeah, and that can happen. You can lose 10% in a day pretty quickly if there is a positive here. Also, you got to watch out for an M&A. If these get too cheap, eventually somebody might step in and buy, or you could see merger within the industry as well.
Right. Yeah, it was Mosaic who warned that there could be like some consolidation there.
Right. Yeah.
Okay, some good tips there. And you can check out all these podcasts on iTunes and SoundCloud and also on Zax.com. Be sure to check them out there. And Jeremy has a lot of articles also on Zax.com. You can read them all there and check out videos and our podcasts also on YouTube. And you can subscribe and get everything on YouTube over on YouTube channel. So from everyone here at Zax, I'll see you again next week.